The world is changing. A new financial system is emerging. It's built on revolutionary technology called blockchain. This technology is the foundation of cryptocurrencies. Cryptocurrencies, like Bitcoin, are digital assets. They operate independently of traditional banks and governments. This makes them attractive to many. For years, cryptocurrencies were seen as fringe. They were shrouded in technical jargon. Many dismissed them as too complex or risky. However, times have changed. Cryptocurrencies are moving into the mainstream. More and more people are recognizing their potential. This is especially true in the United States. As of November 26, 2024, the cryptocurrency landscape has transformed. The United States is leading this change. Significant developments are shaping the future of finance. Investment strategies are evolving, market dynamics are shifting. We are witnessing a financial revolution. This essay will explore the key factors driving this revolution. We'll delve into the evolving regulatory environment, the surge in market activity, and the impact of Bitcoin's halving event. Join us as we explore the exciting world of cryptocurrencies. The United States government's stance on cryptocurrencies has shifted dramatically. Once wary, the government now embraces this new technology. President-elect Donald Trump has been vocal in his support for cryptocurrencies. He sees them as a key driver of economic growth. Trump's administration is committed to making the United States a global leader in the cryptocurrency sector. This includes plans to overhaul the Securities and Exchange Commission. The goal is to create a more crypto-friendly regulatory environment. This will encourage innovation and attract investment. Furthermore, the government has introduced the Financial Innovation and Technology for the 21st Century Act. This landmark legislation aims to provide clear guidelines for digital assets. It clarifies the roles of the Commodity Futures Trading Commission and the SEC in overseeing this new market. This proactive approach is fostering confidence in the cryptocurrency market. Investors are responding positively to the government's commitment to fostering innovation and protecting consumers. The stage is set for explosive growth. The cryptocurrency market is experiencing a surge in activity. Bitcoin, the world's first and largest cryptocurrency, is leading the charge. Its price is approaching the historic $100,000 mark. This reflects growing demand and increasing acceptance. Several factors are driving this growth. The anticipation of favorable regulations is attracting institutional investors. The recent Bitcoin halving event, which reduced the rate of new Bitcoin creation, has further fueled the price surge. Another significant development is the approval of cryptocurrency exchange-traded funds. ETFs offer investors a regulated way to gain exposure to cryptocurrencies. This has made it easier for both institutional and individual investors to participate in the market. The cryptocurrency market is evolving at a rapid pace. It's creating new opportunities for investors and transforming the financial landscape. This is just the beginning of a new era of finance. The United States has long been a global leader in finance and technology. Now, it's at the forefront of the cryptocurrency revolution. This shift is largely due to a changing regulatory landscape. Gone are the days of uncertainty and apprehension. The United States government is actively embracing the potential of digital assets. FIT 21, Reshaping the Financial Landscape. The Financial Innovation and Technology for the 21st Century Act, or FIT 21, aims to regulate digital assets. Introduced in 2024, it provides a clear framework for digital asset regulation. FIT 21 reflects the growing influence of the cryptocurrency industry in Washington. The legislation has bipartisan support, recognizing the need for clear rules. It delineates the responsibilities of regulatory agencies to avoid overlapping jurisdictions. The CFTC oversees digital commodities while the SEC regulates digital securities. The SEC embraces the future. The SEC, long a gatekeeper for traditional markets, is adapting to cryptocurrencies. Under new leadership, the SEC is more open to digital assets. This is evident in the approval of Bitcoin ETFs. ETFs offer a regulated way to invest in Bitcoin. This marks a significant step towards mainstream acceptance. Clarity for investors, confidence for markets. The combination of clear regulatory guidelines from Congress and a more accommodating stance from regulators like the SEC is injecting a much-needed dose of confidence into the cryptocurrency market. This clarity is attracting both institutional and individual investors who were previously hesitant to enter the space. For years, the lack of clear regulations created uncertainty and hindered the growth of the cryptocurrency market. Businesses operating in the space faced a complex web of rules that varied from state to state and agency to agency. This regulatory ambiguity made it difficult for companies to raise capital, attract talent, and scale their operations. It also made investors wary of putting their money into a market that seemed like the Wild West of finance. However, the tide is turning. The U.S. government's proactive approach to cryptocurrency regulation is creating a more stable and predictable environment. This is encouraging innovation, attracting investment, and paving the way for wider adoption of digital assets. The U.S. government's embrace of cryptocurrencies goes beyond simply providing regulatory clarity. The administration recognizes the transformative potential of blockchain technology and is actively exploring its applications in various sectors. President-elect Trump has spoken about the possibility of creating a national cryptocurrency reserve, a move that would further solidify the U.S. position as a global leader in the digital asset space. Beyond the financial sector, blockchain technology is being explored for its potential to improve government transparency, enhance cybersecurity, and streamline supply chains. The U.S. is at the forefront of this exploration, with various government agencies investing in research and development. This forward-thinking approach is creating a fertile ground for innovation. Entrepreneurs and developers are flocking to the U.S., drawn by the prospect of a supportive regulatory environment and the opportunity to be at the forefront of a technological revolution. The cryptocurrency market is abuzz with excitement. Bitcoin is on a remarkable journey. As of November 26, 2024, Bitcoin is nearing the $100,000 mark. This surge in value shows growing confidence in its potential. Bitcoin has weathered storms and emerged stronger. The year 2024 marked a significant milestone in Bitcoin's history, the halving event of April 2024. This event, hard-coded into Bitcoin's DNA, occurs approximately every 4 years and has a profound impact on its price dynamics. During a halving event, the reward that miners receive for adding new blocks to the Bitcoin blockchain is cut in half. This reduction in new supply entering circulation effectively slows down Bitcoin's inflation rate, making it a more scarce asset over time. Historically, Bitcoin halving events have been followed by periods of significant price appreciation. This is because the reduced supply, coupled with increasing demand, creates upward pressure on its price. The 2024 halving event has proven to be no exception, contributing to Bitcoin's remarkable surge towards $100,000. This phenomenon underscores a fundamental principle of economics: scarcity drives value. As Bitcoin becomes increasingly scarce, its desirability as a store of value and a hedge against inflation is likely to grow, potentially attracting even more investors to its ecosystem. ETFs, opening the floodgates to institutional capital. The approval of cryptocurrency exchange-traded funds, or ETFs, has been a game-changer for Bitcoin. ETFs provide a regulated avenue for institutional investors to gain exposure to Bitcoin. Bitcoin ETFs have removed barriers, allowing easy trading through brokerage accounts. This has unlocked institutional capital, increasing Bitcoin's liquidity and price stability. Increased liquidity. A more mature market emerges. The influx of institutional capital has had a profound impact on the liquidity of the cryptocurrency market. Liquidity refers to how easily an asset can be bought or sold without causing significant price fluctuations. The market has matured significantly in recent years thanks to institutional investors. Higher liquidity benefits both individual and institutional investors. Increased liquidity is a sign of Bitcoin's growing maturity and acceptance as a mainstream asset class. Beyond Bitcoin, a thriving ecosystem of digital assets. While Bitcoin dominates headlines, it's not the only game in town. The market is a vibrant ecosystem of thousands of digital assets. Ethereum, with its smart contracts, has created a vast ecosystem of dApps. Beyond Bitcoin and Ethereum, altcoins address specific blockchain needs. From privacy coins like Monero to stablecoins like Tether, the market is diverse. This ecosystem offers opportunities and challenges, requiring thorough research. At the heart of Bitcoin's design lies a fundamental principle: scarcity. Unlike fiat currencies, Bitcoin has a finite supply capped at 21 million coins. This scarcity is hard-coded through the halving event. The halving occurs approximately every 4 years. It ensures a predictable decrease in new Bitcoin creation. Bitcoin's halving events have historically been followed by significant price appreciation. The first halving in 2012 reduced the block reward from 50 BTC to 25 BTC. Bitcoin's price surged from around $10 to over $1,000. The second halving in 2016 saw the block reward drop to 12.5 BTC. Bitcoin's price climbed from under $700 to nearly $20,000. Analysts view halving events as catalysts for Bitcoin's price appreciation. Reduced supply and growing demand create upward pressure on its price. This often leads to extended bull markets. The most recent halving in April 2024 halved the block reward to 3.125 BTC. This reduction coincided with heightened interest from retail and institutional investors. The confluence of these factors propelled Bitcoin's price to new all-time highs. As of November 2024, Bitcoin is trading near the historic $100,000 mark. The 2024 halving has played a significant role in this price appreciation. It reinforced Bitcoin's narrative as a scarce digital asset. This scarcity, coupled with its decentralized nature, cements Bitcoin's position. Bitcoin remains a formidable force in the global financial landscape. Supply and demand, a delicate dance. The halving event influences Bitcoin's price, but it's not the only factor. Supply and demand, driven by various factors, determine the market price. The halving creates a predictable reduction in new Bitcoin issuance. Other factors, like selling rates, also influence supply. Demand is driven by macroeconomic trends, regulatory developments, and market sentiment. The halving often shifts the balance in favor of higher prices. However, the complex interplay of these factors shapes Bitcoin's price. Understanding this dance is crucial for investors. Beyond the halving, other factors at play. The 2024 Bitcoin halving occurred alongside significant developments. Growing adoption by institutional investors bolstered Bitcoin's appeal. Major financial institutions and corporations added Bitcoin to their portfolios. Increasing acceptance by merchants and businesses fueled demand. The regulatory landscape is becoming clearer and more favorable. This clarity attracts more investors, boosting Bitcoin's price. These factors, combined with the halving, contribute to Bitcoin's surge. Bitcoin's position as a leading asset class is solidified. A gateway to crypto ETFs demystified. Cryptocurrency. ETFs have opened the doors to a wider audience. Imagine buying shares of Bitcoin or Ethereum as easily as Apple stock. ETFs provide a regulated avenue for exposure to cryptocurrencies. A cryptocurrency ETF tracks the price of a specific cryptocurrency. Investing in an ETF means buying shares representing ownership in the fund. This structure offers advantages for new investors. It eliminates the need for digital wallets and managing private keys. Investors rely on the familiar infrastructure of traditional markets. ETFs make cryptocurrency investing accessible and straightforward. They offer a sense of security and transparency. This has democratized access to the cryptocurrency market. Bridging the gap traditional finance meets crypto. Cryptocurrency ETFs mark a milestone in finance and digital assets. They provide a regulated way for institutional investors to enter the market. ETFs offer transparent pricing, custody solutions, and regulatory oversight. This instills confidence in institutional players. Institutional capital drives up cryptocurrency prices and market stability. Sophisticated trading strategies and risk management expertise enhance the market. The influx of capital contributes to a robust market ecosystem. ETFs bridge the gap between traditional finance and cryptocurrencies. The benefits of ETFs: accessibility, liquidity, and familiarity. Cryptocurrency ETFs offer accessibility, liquidity, and familiarity. They eliminate the need for digital wallets and private keys. Investors can buy and sell ETFs through existing brokerage accounts. ETFs are highly liquid, allowing quick and easy transactions. This provides flexibility for investors to enter and exit positions. Familiarity with ETFs offers comfort to traditional investors. The structure and regulations of ETFs are well established. This reassures investors venturing into cryptocurrencies. ETFs democratize access to digital assets. They attract both seasoned traders and newcomers. This drives the growth and mainstream adoption of cryptocurrencies. A growing market, Bitcoin and Ethereum ETFs lead the way. The cryptocurrency ETF market has seen remarkable growth. Bitcoin and Ethereum ETFs have emerged as frontrunners. The iShares Bitcoin Trust ETF and Grayscale Bitcoin Trust ETF are prominent examples. These ETFs track Bitcoin's price without direct ownership. Ethereum ETFs like Purpose Ether ETF provide exposure to Ethereum. As the market matures, more ETF products will emerge. This expansion offers investors more choices and diversification. ETFs, a catalyst for mainstream adoption. Cryptocurrency ETFs signal a step towards mainstream acceptance. They lower barriers for investors hesitant about direct ownership. ETFs attract institutional investors, driving up cryptocurrency prices. This influx of capital contributes to market stability and maturity. Increased media attention and public awareness follow ETF popularity. Investors become more comfortable with ETFs and underlying assets. ETFs democratize access and attract institutional capital. They bring legitimacy to the cryptocurrency space. ETFs will shape the future of finance and drive mainstream adoption. A transformative trajectory, the path ahead for crypto. The cryptocurrency market is evolving into a global financial force. Favorable regulations and institutional adoption paint a bright future. Pro-crypto policies and landmark legislation support growth. Institutional capital recognizes blockchain's transformative potential. Cryptocurrencies disrupt traditional systems and create new markets. Decentralized finance and NFTs revolutionize various industries. Greater stability, transparency, and accessibility are expected. Cryptocurrency ETFs make it easier for investors to gain exposure. This trend will continue, offering more choice and diversification. Navigating the waters, balancing opportunity and risk. The future of cryptocurrency is bright but requires caution. Decentralization and disruption introduce unique risks. Volatility remains a hallmark of the cryptocurrency market. Investors must be prepared for significant price swings. Security is a paramount concern with increasing mainstream acceptance. Appropriate measures to secure digital assets are essential. Thorough research and due diligence are crucial. The market is constantly evolving with new projects and risks. Investors must stay informed and seek trusted advice. Informed decisions based on risk tolerance are vital. Balancing opportunity and risk is key to successful investing. The crypto horizon, a new financial frontier. The cryptocurrency revolution is here to stay. The U.S. is now a leading advocate for digital asset innovation. Pro-crypto policies and legislation support market growth. Bitcoin approaches the $100,000 mark. The 2024 halving reinforces Bitcoin's scarcity narrative. A dynamic ecosystem of digital assets is emerging. Ethereum powers innovation in decentralized finance. Cryptocurrency ETFs democratize access to digital assets. New capital brings stability, transparency, and legitimacy. Wider adoption and acceptance are on the horizon. A call to action. Embrace the future. Invest wisely. The cryptocurrency revolution is a paradigm shift in how we think about money and finance. It's reshaping the financial landscape and empowering individuals globally. However, cryptocurrencies come with risks and challenges. Volatility and security concerns require thorough research and trusted advice. Balance the potential of this technology with its inherent risks. Education, risk management, and due diligence are key. Understand blockchain fundamentals and market drivers. Invest only what you can afford to lose. Diversify your portfolio. Research projects thoroughly. Secure your digital assets with reputable measures. Embrace the future of finance wisely and responsibly.